Hey everybody, welcome to the Blue Collar Wealth Podcast. And we call it that because that's what it's about. It's real finance for real people. And we often get asked, what kind of clients do you work with at Stonehouse? And the term we like to use is right behind me, blue collar wealth. Most of our clients have anywhere from $500,000 to several millions of dollars saved up in their retirement or their other accounts. And they don't necessarily care about buying a mansion on the coast or buying a ticket to Mars on the next SpaceX launch. Most of our clients talk to us about how to squeeze more juice out of their retirement and live a long, happy, healthy life. My name's Bob Brown. I'm a certified financial planner and a founding partner here at Stonehouse Retirement Income Planners. I've had the privilege of helping many families plan and live their lives for over 20-some years now. I'm part of a growing team here at Stonehouse, and we've seen our clients go through a ton of different things in their lives. And now, thanks to the beauty of this podcast, we get to share some of those stories and maybe some shortcuts to hopefully get you on the right track or keep you on the right track with your own finances. This episode I'm excited about. We're going to talk about recognizing different types of risk that you're facing and how you should handle those. Another less sexy word for risk management is insurance. But this topic can be overwhelming, the different types, the different options and variations and riders, not to mention the cost involved. If these are some of the things that are going through your head these days, then you probably have a ton of questions and you don't even know where to start. Well, there's no worries. You're not alone in this. Most of us want to protect different parts of our lives, but we get overwhelmed by the information overload that comes at us like a wave in the face, right? So by the end of this podcast, I hope we're able to get you to a better place where you can understand why it's important for you to know the different types of risk, how to best proceed, and most certainly a great way to start. So to help me discuss managing your risk, I brought in Chad Taake. Chad's an advisor at Stonehouse, and he has experience working with people just like you who want to balance the right amount of protection with a reasonable amount of cost. Today we're going to talk about, in this topic, everyone's favorite subject, which is insurance, right? It seems it's almost like a negative word or a bad word to those to everyone except those who sell insurance. Everybody hates it, but it serves a purpose, right? It is a tool that we use all the time. Not that we necessarily are out there talking that everybody needs insurance, but everybody has risk in different parts of their life, right, Chad? So I know that you have a lot of conversations with your clients about this and are pretty candid conversations about getting that right balance between managing some of that risk on your own and offloading it to an insurance company for whatever asset you're trying to protect. So where do you start that conversation with somebody?
Yeah, thanks for the question. So, I think for where I usually start is actually just making sure people understand, how insurance companies, are using their money, making sure they kind of have that background, but also understand the importance of insurance. Because insurance is a critical part to, each person's financial stability. And
Sure.
there's absolutely a need to have the right coverage at the right times, for yourself and your family. The key though is really making sure you have the right coverage and not more than what you really need, and
Yeah.
really understanding the objective of each of the different plans that you might have. Because in the end, the insurance company is going to take your premiums, they're going to invest it into the market and try and generate some gains that, hopefully will exceed your premiums. And so, in the end, your choice is, do you give it to an insurance company to invest into the markets for that protection that the policy is providing? Or, is it better served being in your accounts and growing so that you can use it for whatever your needs are down the road?
Yeah. And I guess that really depends on the type of insurance, right? I mean, you take a look at life insurance and do that sort of analytics on it versus looking at auto or home or whatever. There's some similarities, but there's some differences, right?
No, absolutely. I mean, the key with life insurance, uh, depending, there's really good salesmen out there, from what I found, right? And so there is for sure a time and place for life insurance. If you have a young family and you're the sole breadwinner for the family, or even if you're not the sole breadwinner, but you want to make sure your family's protected in the case of something terrible happening, having a good term life policy really makes sense. What I find people doing is also like, they're 50, and their families, largely established, they have a decent nest egg, and they're talking about renewing those, term life policies. And so then the question is like, what's the objective that you're really trying to
Right.
accomplish? And if you already have an established nest egg and you have some funds for your family, if something unexpected did happen, then my personal opinion, the approach I take for my family is, at that point, it's, kind of a waste of money. I'd rather keep that and invest that for my nest egg to grow, and hopefully my legacy to grow. And so, with home or, health, then it's more a question: do you have the right deductible? Are you really kind of overinsured or underinsured? Do you have the right protections in place to make sure that if something did come up, that you're not surprised with a huge deductible, but also wasting money with having such a small deductible that it just doesn't make any sense. Likewise.
Chad, can I interrupt you? Do you think it helps? Do you think it works to your advantage as a financial planner who's not selling insurance policies? Do you think that gives you a better perspective to kind of weigh in with your clients on, hey, this makes sense, this doesn't make as much sense?
Yeah, I mean, for sure, it removes any kind of chance of bias. A lot of insurance products have quite a bit of fees, and so by not dealing with insurance, I can just give an honest opinion. I like to just defer to like how I approach our family situation for me personally, and can share like what I do personally, to help give people another perspective.
Yeah. I always joke that I want to have just enough life insurance where my family's protected if I'm gone, but I absolutely don't want to incentivize my wife by having that number too high, right? So, what's interesting is life insurance is protection against dying too soon, right? But then we also have a subject we sometimes work with folks on, is the protecting against living too long, which sounds really weird, but long-term care insurance is something that folks look at. Not everybody, but some folks look at. What if I go nursing home and I have those expenses? I don't want to see my life's wealth dwindle down to zero. I'd rather see that money transfer to my children or my heirs. Are you having that conversation as much anymore?
No, absolutely. And honestly, it's a very difficult conversation.
No doubt.
With all insurance, if we could see the future, we know exactly the right policies to get. The long-term care in particular is a really challenging one, because for those people that are in a home for an extended period of time, it drains your net worth very quickly, and it's not a situation that anybody desires. What I'd like to share just some of the statistics out there, and there was a study done that kind of looked at what's the probability that you're going to be in long-term care for an extended period of time, and the statistics are that like very few people, percentage-wise, actually are in long-term care for more than 6 months to a year, and so it's those unfortunate situations with dementia that tend to really kind of be the far end of the bell curve. And so, given that such a small percentage of people, tend to be in that situation of needing that long-term care for a really extended period of time. If people have a nest egg saved up, I tend to prefer the approach of kind of being self-insured, and playing the probabilities that, you're not going to be, one of the far ends of the bell curve, and needing that long-term care. But it honestly it's a very difficult discussion and a very difficult decision for sure for people.
Yeah, and that's a really good point. I would also say that that's part of our job, right? Having those difficult discussions. And I think as we're talking about this, and I'm sort of framing it out in my mind, I realize, insurance is about a transfer of risk, right? If you don't have any insurance on yourself on anything, then all the risk is on your shoulders. So you have to look at what are the risks, how much am I willing to offload, and what's the cost of that? And it's just a balancing act, right? But I think as you're talking, Chad, what really jumps out at me is that a good financial planner, your role is to not just show somebody today what they're at risk of, but also what's coming down the road at them that they could maybe prepare for now. Like long-term care insurance sure makes it, if you really feel you need it, it sure makes a heck of a lot more sense to get it now than 10 years from now, no matter what your age is, right? 10 years from now will definitely be more expensive. So, and then there's folks that don't need it. Like you said, they have some ability to self-insure. So do you find yourself playing that role with people? Do you find yourself bringing up points to people that they didn't even think about yet, but you're bringing it to their attention and they need to start thinking about it?
No, absolutely. And, a big part of the discussion, whether, it's on the retirement planning or insurance, one of the first discussions I like to start with is just kind of getting to know the people and, their lifestyle, their family history from a health standpoint.
Right.
Because, those are huge inputs into kind of making that decision. Is it right to get the long-term care insurance? How far out do I need to plan, to my nest egg to last? It's super critical.
And I guess we'll wrap it up because we always go long on these things, and it's so fun. Maybe it's just the fact that we're planners. I just enjoy talking about it. But would you say like something that somebody would be a good habit to have, maybe once a year, putting it on their calendar, or to just review all the insurances they have and just make sure, is something as simple as calling your property casualty agent to make sure your cars in your home are at the right amounts and things like that? Would you say once a year on that stuff?
Yeah, once a year, for sure. Once every 2 years, definitely. It's worth, like you said, it's just a phone call to one or two competing firms just to see, are you still getting the best value in your policy? That there has been times where we do, as part of our life stack system, we'll at least talk about it, and make a decision together if you're interested in looking to requote out. And I've had it where we were looking at the policies, the client it didn't feel right. I'm like, I definitely recommend getting another quote or two on this. And the next day he came back and he was saving about $1,200 a year in his auto insurance. And so, obviously he hadn't been staying up on it every year previously, but, that's something that, an example of where, spending, a half hour to an hour getting some quotes can really make a big difference. And then that savings just goes then to your nest egg or living expenses, and makes a big difference in your overall plan.
Yeah, that's exactly. I can see you like smiling when you're talking. I mean, those are great stories where you save somebody money just for doing something simple, but you get caught up in your own life, right? And you forget to do that. I can't remember the last time I washed my car, and that seems like the simplest thing. But when it turns into a rust bucket in 5 years, I'm going to kick myself. But yeah, so that's the beauty of having an advisor. And if you're with a good advisor, right, if you're working with somebody and they know what they're doing, they should be reaching out to you proactively and asking you to review those once in a while.
Absolutely.
Yeah. Well, as usual, thank you very much for the time. I know you got to get back to work, and we'll do this again. I appreciate it, Chad. Thanks.
Thanks, Bob.